Have you heard anything new about the stock market? If so, you should know that Tesla stocks are one of the most exciting ones out there. Since the beginning, Tesla stocks have been all over the news. Many people see it as a high risk, high reward stock with a controversial star. As a CEO, you never know how far Tesla could go. That's why so many people like it. It got so much attention in 2021 that its market value reached $1 trillion. Is all the fuss about Tesla stock worth it? After hearing this, would you want to buy Tesla stock? Check back to find out. Important news from stock experts. On February 1, Tesla stock fell 11.99%, making the two-day losing streak even longer. This came after CEO Elon Musk suggested over the weekend that investors sell 10% of their shares in the electric car company. It looks like this drop will be the biggest for the stock this year. It comes after a drop of about 5% on February 3, which slowed the stock's mostly upward trend for the year. Since October 28, 2021, when Tesla's market cap topped $1 trillion, the stock has gone up more than 47%, or more than doubling from the previous year. This is because the company reported better automotive margins and overcame a chip shortage to ramp up production while rivals struggled. A lot of Tesla stock was sold by current and former board members in 2012. These include Chairwoman Robin Denholm, Kimball Musk, Elon Musk's brother, IRA Aaron Price, and Antonio Garcias. Musk did not get a salary or cash bonus, so as part of a CEO success plan, he was given a large package of options. His wealth comes from stock awards and the value of Tesla's stock going up. In 2012, the prize was 22.8 million shares, with a strike price of $6.24 each. These will be gone on August 13, 2022. Jefferies raised its price estimate for Tesla from $950 to $1,400 in a report released on Monday, even though there had been recent insider sales. The increase was made without ignoring execution risk. Analyst Philip Houchois said that Tesla is getting close to being able to balance the speed and price goals that are just as important as Elon Musk's vision and making money. Like many other experts, he thinks Tesla will stay ahead of the competition in the battery electric car market for many years to come. Musk's car company, on the other hand, is now up against new companies and old ones that make cars. Rivian, a company that makes electric cars and has backing from Amazon, Ford, and Cox Automotive, is going public this week. The R1s, a sport utility vehicle with 3 rows and room for 7 people, will be sent to buyers next month. A Chinese car company called Geely just showed off a heavy-duty battery-powered electric vehicle that will compete with Tesla's Semi, which has been pushed back. Volkswagen sold more than 12,000 ID series fully electric vehicles in China in October. The China Passenger Car Association released figures this week showing that the company sold over 16,000 electric vehicles in China last month. While Tesla sold about 13,725 cars there, it chose to send 40,666 of the 54,391 electric cars it made in Shanghai to other countries instead. Nikola Tesla China tends to start quarters slowly and end them strongly. For example, there were more than 50,000 orders in September. Because of this, Michael Dunes, CEO of car industry advisor Zozo, says it's hard to draw firm conclusions from October's numbers. Go. Tesla shares may also be falling because investors aren't sure how the company's Semi project will progress and how it will work with Hertz, a car rental business. The company says that making Semis is still in the early stages of development. A Pepsi official says that the company expects Tesla to send some of its heavy-duty trucks to the food and drink giants this quarter. Hertz said that it will buy 100,000 electric cars from Tesla for its higher fleet. And temporary CEO Mark Fields said that the deal between the two companies is real. What about Musk? He has said that there is no agreement with Hertz for the big order. It's hard to say what will happen in Tesla's future, but it looks bright. Tesla owners should not get too excited and should think about the risks the company might face in the next 5 to 10 years. Even though the government offers strong benefits like tax breaks for alternative technology, Tesla cars are still too expensive for most people to buy. Tesla's Model S still costs a lot. In November 2021, it will start at $94,990, and that's before any bonuses or discounts. Since May 2021, Tesla's newest cheaper option, the Model 3, costs $43,990 before tax credits. This means that most drivers still can't save enough on gas to make the car worth it. Not only are the cars expensive for people to buy, but they are also expensive for Tesla to make. Gordon Johnson, an expert at Vertical Group, says the company lost almost $14,000 on every Model 3 it sold in 2018. These numbers should get better as the company grows, though. Tesla's battery supply might be running low. One of Tesla's early problems was that its products didn't have enough batteries to power them. Tesla's Gigafactory in Sparks, Nevada is still being built. It will cover an area of more than 9 million square feet and will help the company solve its battery problem. Tesla will be able to make more than 500,000 cars a year with the help of the lithium-ion plant. Big projects like the Gigafactory often run into problems with regulations and logistics, and it's not clear if the factory will be finished on time. The government of Nevada has given its approval to the Gigafactory. It is expected to add $100 billion to the economy over the next few decades. Musk has hinted that the company might need more than one Gigafactory to meet demand and keep the company fully charged and shareholders happy, even though the plant is only 30% built. A huge amount of capital expenses, or capex, will need to be made. Tesla made the most plug-in electric cars in the first half of 2021, with 12.52% of all worldwide sales, or 14.55% of all sales. When gas prices dropped in 2014 and 2015, Volkswagen Group was the second biggest maker of cars. Tesla lost his appeal. There are, after all, cars that run on gasoline that compete with Teslas, and as gas prices fall, they become more appealing from an economic point of view. Gas prices don't have to stay this low for a decade in order for them to hurt the value of Tesla stock. Less than that, and old cars can still drive on them. Two different areas of Tesla's gas are giving it trouble at the same time. The first problem is that the world is making more oil. The once popular idea of peak oil seems to have been disproved, since oil production has been going up every year from 2009 to 2019. Thanks to horizontal drilling and hydraulic fracturing, oil companies are getting better at getting the oil out of the ground. There are more oil supplies, and internal combustion engines are getting better at using fuel. In the United States, light-duty passenger cars are getting better at using gas on average. The Bureau of Transportation Statistics says Tesla needs to sell a lot more cars if it wants to become a well-known car company and make a steady income. People will be less likely to switch to electric cars if fuels made from petroleum stay a much cheaper option. Tesla isn't the only company that makes electric cars. It's interesting that Thomas Davenport may have created the first electric cars as early as 1834, though Tesla seems to have been the most successful so far. The Chevy Bolt and the Nissan Leaf were two strong rivals, but they didn't catch on right away because they were expensive and didn't have a long range. The Nissan Leaf starts at $27,400 before rebates in October 2021. It can go up to 226 miles on a single charge. Apple Incorporated thinks it can compete with Tesla in the market for cars. Google has also put money into the auto business, but Tesla is right to be wary of companies that already have a lot of customers. Musk reportedly said about his company, "We're going to spend crazy amounts of money on capex." There must be a return on investment for many people who want to put a lot of money into capital projects. This seems to be especially true in a new market full of businesses that have failed. Tesla has already spent a lot of money on building the Model 3 and Model X cars, and the battery plant will be no different. In a statement with the SEC for the first quarter of 2021, Tesla said that it thought its annual capital costs would rise to $4.5 billion, or even $6 billion. The same quarterly report talked about how much Tesla depends on Elon Musk. Elon Musk, who is Tesla's boss and chief executive officer, is very important to the company. The business said that Musk is very busy with work. His previous job was as CEO of PayPal. Now he is the CEO and Chief Technical Officer, CTO, of Space Exploration Technologies. He is also the head of SolarCity, a business that puts up expensive solar panels. If a top leader leaves, it could be very bad for the business. With a $1 trillion value, it's hard to argue with Tesla's success as a maker of electric cars. However, there are still many things that could get in the way, such as the fact that making affordable EV technology is hard and rivals are a threat. Do you agree with the Tesla split? Leave a comment below.